Disclaimer. All contents, ideas, opinions and information shared or implied herein are for informational and educational purposes only. Hello everybody. Welcome to Sunny the Eggman YouTube channel. In this video, we will be revealing on the fundamental analysis for Frasers Centrepoint Trust, its strategic review and recent financial results. Before starting, please help to share and subscribe this channel, as your support is our biggest motivation to continue on producing quality contents. Frasers Centrepoint Trust is one of the largest suburban retail mall owners in Singapore, listed in SGX since July 2006. Its manager, Frasers Centrepoint Asset Management Limited, is a real estate management company which is wholly owned subsidiary of Frasers Property Limited. To date, Frasers Centrepoint Trust has approximately 2.1 million square feet of net lettable area across 9 retail malls in Singapore, namely Causeway Point, Waterway Point, FCT holds 40% interest, Tampines 1, North Point City North Wing, inclusive of Yishun 10 Retail Podium, Tiong Bahru Plaza, Century Square, Changi City Point, Hougang Mall and White Sands. Also, it owns a 31.15% stake in Hektar Real Estate Investment Trust, a retail-focused REIT in Malaysia listed on Bursa Malaysia main board. The tenant portfolio for Frasers Centrepoint Trust is mainly essential services such as food and beverage, beauty and healthcare, supermarket and grocers, as well as fashion and accessories. Its market capitalization is approximately 3.6 billion Singapore dollars as of financial year ended the 30th of September 2020. Firstly, we will be looking at Frasers Centrepoint Trust financial statements for fundamental analysis. The revenue for Frasers Centrepoint Trust is increased by 8%, from 181.6 million Singapore dollars in 2017 to 196.4 million Singapore dollars in 2019. However, it is experiencing huge drop of 16%, from 196.4 million Singapore dollars in 2019 to 164.4 million Singapore dollars in 2020, mainly due to the emergence of COVID-19 pandemic. Also, the net property income decreased to 5 years lowest, from 129.9 million Singapore dollars in 2016 to 110.9 million Singapore dollars in 2020. The overall weak performance in 2020 is mainly due to rental rebates assistance granted to tenants during COVID period. Due to COVID-19 restriction and heightened alerts implemented by government, the income for retail tenants are heavily impacted, and it also reduces the gross revenue for some malls such as Changi City Point, Anchor Point, North Point City North Wing and Causeway Point. To add on, higher provision for doubtful debts and unrealized loss from fair valuation of interest rate swaps for hedging of interest rate also worsen the financial performance. Next, the distribution per unit of this REIT is also decreasing from 12 cents in 2019 to 9 cents in 2020. In term of NAV, it is slightly improved from 2 Singapore dollars and 21 cents as of the 30th of September 2019 to 2 Singapore dollars and 27 cents as of the 30th of September 2020. The increase is mainly due to investment in shares of ARF and revaluation surplus of 4.7 million Singapore dollars on the investment properties. Nonetheless, the net debt to equity for this REIT increased by 16% from 2019 to 2020. Investors need to monitor if there is constant increase in debt for the following years. Now we will be revealing on the strategic review on this REIT stock. The stock price is trading at 2 Singapore dollars and 25 cents as of the 1st of October 2021, which has dropped by approximately 6% as compared to 1 year ago. It is currently trading at par with its NAV of 2 Singapore dollars and 27 cents as of the 30th of September 2020. However, if we are looking at the 5-year stock price trend for Frasers Centrepoint Trust, it actually experiences a constant increase from 2 Singapore dollars and 17 cents in October 2016 to 2 Singapore dollars and 50 cents in June 2019, with the peak at 3 Singapore dollars during February 2020. It shows a significant drop to approximately 1 Singapore dollar and 60 cents during the start of the pandemic in April 2020. The decrease in stock price is concurrent with the drop of credit ratings by Standard & Poor and the decrease of distribution per unit by 48% in Q2 2020 due to retention of 50% of distributable income to preserve financial flexibility. To add on, occupancy rate and shopper traffic during COVID-19 is decreasing significantly, especially when government introduced circuit breaker measure in Singapore during April 2020. Lastly, let's look at Frasers Centrepoint Trust unaudited financial results for third quarter ended the 30th of June 2021. In the 28th of May 2021, Frasers Centrepoint Trust has completed its divestment on Utpoint. In terms of portfolio occupancy rate, this REIT stock maintained a stable rate at 96.4% even though government implemented Phase 2 heightened alert between April and June 2021. For balance sheet review, its gearing level in Q3 2021 is reducing from 35% to 33.9%, based on year-on-year comparison. One thing worth mentioning is that only remains 8.0% of the lease expire to be renewed in Q4 2021. This lower the risk of no renewal or new tenants in FY 2021, which will impact the gross rental income. The management is hopeful on the refreshed and expanded retail offerings in upcoming months. Based on the overall financial results, it is clearly indicated that Frasers Centrepoint Trust is significantly impacted by COVID-19 pandemic, mainly due to huge challenges faced by its tenants for suburban malls. It is also reflected in its stock price trend, whereby it hits 5 years low in April 2020. However, there are some good and bad points to take note before buying or selling this REIT stock. Good points are this REIT is currently trading at par of its NAV, its distribution per unit is consistent over past 5 years, except drop in 2020 due to COVID-19, and its annualized return is approximately 6% per year. Also, it is well positioned in Singapore suburban retail sector, which is one of the most resilient sectors through economic cycles. Statistic from CBRE Singapore Real Estate Market, Q2 2021 shows that suburban retail's rental rose in Q2 2021 as compared to a drop in prime retail rents. Nonetheless, investors need to take note on the increased borrowings which might lead to high leverage ratio, high current ratio in 2020 and high debt to cash flow in recent year. Do bear in mind that the minimum holding period for this REIT is 3 to 5 years. Hope you can have some valuable insights on Frasers Centrepoint Trust after watching this video. Do comment and share with us your thoughts on the above points. Stay tuned and remember to share, like and subscribe our channel. I'm Sunny the Eggman. Goodbye.